buying aircraft at the low point in the market because everybody was nervous about economic situations. And then the market obviously would come back like it always does. And ka-ching. That was aircraft trading in a nutshell.
This is the Time on Wing podcast. Welcome back. Episode 1, Season 2, Episode 1. This is 2024. I'm Courtney Miller with Visual Approach Analytics. With me, as always, for another year, is Garrick Deschavon of Collateral Verifications. Garrick, just how was your contract extended? I don't get it. It makes no sense.
Yeah, I know. I squeaked it through. I think, it just made it.
Okay, Garrick, who are we talking to today?
We are actually talking to Jep Thornton. So Jep is currently the partner at Aerolease Aviation. He was also a partner at Automatic LLC. He was president at Unicapital. He was also owner for NSJ Corp. He was VP Aerospace Lending for PK Aerospace. He was a broker at United Aviation Services. He's had also various roles with some overseas airlines like National Airways, World Airways, the Flying Tiger Line. He's had a bunch of roles within ISTAT, which, as you very well know, I'm part of as well. And he's been very involved for a long time, including he was president for a while. He's also chairman of the ISTAT Foundation, and some of the cool stuff that he does. He has also been very involved in automotive racing, which is pretty cool. And he also has a rock band. So, it just kind of checks all the boxes for cool guests to talk to. So this is going to be a great discussion. So, Jep, this is your time on wing.
Just a quick intermission before we continue with the show. We do get a lot of questions about how our listeners can support the show, and frankly, the easiest way is to continue the spirit of the show, which is just to reach out to us at conferences. But we also run businesses as well, and you can support us by supporting a lot of the work that we do. You can support the work that I do through Visual Approach by visiting visualapproach.io, where we produce a lot of research and analysis, a lot of data visualizations.
From my side, obviously, I focus more on the metals, so anything that's aircraft related, if you're looking for valuations, whether it's on aircraft engines, I'm happy to help with any of those types of projects. So we appreciate certainly the opportunities to work with all of you, and we certainly also appreciate just the fact that people are willing to listen to what we have to say and enjoy kind of our thoughts and takes on what we think is a fascinating industry. So thank you.
Okay, back to the show.
Well, Jep, thanks for joining us on the show. Certainly love to have you on. And, as we've done with all of our other great guests, one of the things that we love to find out about is how you got your start in aviation, right? Where did the passion come from? You've been doing this for a long time now. So, let us know, how did it get all started?
So my father was in the airline business way back from the 50s. I was born in 59, so growing up, I was traveling as a child, and we lived all over the world, and was exposed to aircraft at an early age. I was like a little mini aircraft spotter. I knew what airlines flew what aircraft, and I was a member of the BOAC Junior Jet Club, and had a logbook, and all these crazy things.
That's cool.
Flew in all kinds of cool aircraft. Back then, in the 60s and 70s, they would bring kids up into the cockpit. And I remember one time I even sat in the cockpit and landed in a Caravel, JAT, Yugoslavian JAT Caravel, flying from Zagreb to Frankfurt. Landed in the cockpit. I wasn't even sitting in a seat. I was standing behind the pilots, and they landed the airplane, and it was crazy. Obviously doesn't happen today. But in any event, my dad was in the airline business, and so I wanted to be in the airline business. So when I got out of school, I joined the airlines as a passenger service rep. I was based in Frankfurt. My first job in the airlines, I was based in Frankfurt, Germany. I speak German, so that was easy for me to go over there and work. And as a result, I ended up joining that airline, moving back to New York, and I was in various positions I ended up in the accounting department. So I started learning about accounting and finance and airline finance. And that airline, which was Overseas National Airways, ended up liquidating after the deregulation in 1978, which was by design. I mean, it was a successful liquidation. They had a fleet of DC-1030s, and they were worth a lot of money. They were sold off to Seaboard World and Korean Airlines, and the airline liquidated, and the shareholders made money. Everybody was happy. So I left there, ended up going to World Airways in Oakland, California. And it was there that I met a guy named Dick Doust. And Dick Doust, who was one of the founders of Pegasus with Rich Wiley and Greg Harding Brown, Dick was the golden boy at World Airways in 1980, which was when this was. And that was the first inkling I ever got of aircraft trading. And I worked with him on a couple of projects, and I don't know if he saw something in me, but I glommed onto him and, learned as much as I could. I mean, I was 21 years old, so I learned as much as I could from Dick. And we stayed friends, and we're still friends. I mean, he's retired. He's living down in New Zealand. But Dick was the first guy to kind of give me the idea that this aircraft leasing space and trading thing existed. I continued in the airline business. I went to Flying Tigers. And then the interesting part of the Flying Tiger story was that they had two 747-200s that they had bought from Singapore Airlines, and those aircraft were purchased in the interest rate environment of 81, 82, where the interest rates went to 20%, and they had floating rate debt, so it was a bit of a mess. At the same time, because of inflation, the market went down, and passenger aircraft weren't valuable. So Flying Tiger, who was a cargo operator, had these aircraft which were purchased on speculation, and they had nothing to do with them. So they brought a team over from World that I was part of, and we were managing these aircraft in passenger. And one of the big tour operators that we contracted on those two aircraft was Tower Travel, and that was Morris Naktomi, and a guy named Zev Melamed. So Tower Travel... obviously, the short story here is that Tower Travel ended up taking over that passenger operation of Flying Tigers to start Tower Air. And that was like 1983 or 4 or something like that. And then what Tigers did was they swapped. Pan Am decided they want to get out of cargo, so they swapped passenger aircraft for cargo aircraft. Flying Tigers got the cargo aircraft. And they got out of the passenger business. Tower Air went flying and ended up not, going out of business much later. And that was the end of it. And then Flying Tigers obviously got bought by FedEx. At that point, there was a guy in Tigers called Sam Fondler, who ended up being one of the partners in Tower Air. He was the other one that kind of took me under his wing and said, dude, get out of the airline business, If you want to work for 40 years and get a gold watch and the kick in the butt, then stay in the airline business. But if you want to do well financially, get in the aircraft leasing business. And, this was 1980. I mean, Hazy had just started ILFC in 1973, and George Batchelor obviously was doing what he was doing. But this was all 5, 6, 7 years after that, 8 years after that. It was early days, I mean, there was aircraft trading. I mean, you had guys like Fred Air, and there were a couple other guys that were out there trading airplanes, and George obviously was doing that. And but it was new. So the question was, how do you go about doing this? So then I left, and my first job in kind of the aircraft leasing business was with a company called UAS, United Aviation Services. And United Aviation Services was the company that was run by Safwan Kuzbari, who is now Novus. And Safwan was very young when he started UAS. And UAS, the story of UAS was that Safwan's father had been the foreign minister of Syria before Assad came in and kicked everybody out. So they all went to Lebanon. But because Safwan's father had connections with all the foreign ministers and the governments of all the Islamic countries, he was able to use that to get him in to get the Hajj businesses. So he went to the United States and he contracted all the airlines, TIA, Capital, ONA, all the charter airlines to basically do the Hajj. And he started a big business. It was a great business. And my activity at UAS was to begin their aircraft leasing operation. And the first aircraft that we bought was a old 737-200 QC that was flying with Pan Am and the internal German services before the wall came down. So they were flying at Frankfurt, Berlin, and all that. And we bought that aircraft. It was leased to TWA. And while I was at UAS, we were doing financing. That aircraft was financed by PK Air Finance. And I met the guys at PK Air Finance, and we got to be good friends. And in 1985, they asked me to join PK Air Finance. And I wanted to get in. First of all, I wanted to move to Europe. My wife is German. So she wanted to move to Europe. So we moved to Luxembourg, and I joined PK Air Finance. And I was there from 85 to 89. Now, mind you, all this time, I was kind of trying to figure out how am I going to get into the aircraft trading business on my own. I wanted to be an aircraft trader. And while I was going through this process in my career, I had been meeting guys who had become aircraft traders, independent aircraft traders in the 80s. Guys like Gunnar Bjorg, who was ex-Cargolux, he got into it. Hit with his partners. He had partners in Sweden and a guy named Bob Korstinski, and they were buying aircraft. Michael Goldberg and Stan Bernstein were two guys. They had a company called UACI, and I got to be good friends with them. There were other guys that were out there buying and selling airplanes, but there weren't that many, and it was pretty Wild West. There was not a lot of, I think the biggest difference of back then is there wasn't a lot of data, and the airlines weren't particularly experienced in selling aircraft and what to do. And there was this whole dynamic in the 80s that was interesting. And I wanted to participate in that thing on my own, I think what the way I looked at it and the way that it seemed to me was, you got to remember that in 1980, jet aircraft, as far as values and economic useful life, nobody really knew what it was. Okay, so back in the late 60s, when somebody went into Douglas and bought a whole bunch of DC-9s for $3.5 million, $4 million each, had no clue how long, number one, how long they would last, what the residual value would be. Nobody knew. It was all new. And what happened was that airlines like Eastern and other airlines like that were buying aircraft, and they were flying them for 10, 12 years, and they were selling them for more than they bought them for originally from the manufacturers. So two things happened. First of all, people were like, "Ooh, this is a thing, big arbitrage." So you could find people that really, some airlines were not paying attention. They were just like, okay, where are we? What's our book value? How much do we own this airplane? Oh, this guy wants to pay X. So he would buy the aircraft, and he would make a lot of money because the residual values are going up. So one interesting thing that happened was the OEMs all of a sudden woke up and said, wait a minute. The economic useful life of these airplanes are much longer than we thought they were. And the utility value is much longer. And if you PV all the value back, we should be selling these airplanes for a lot more money than we were back in the 60s. They just didn't know. So it took decades for all this to reconcile itself. And in the midst of those decades, which included market cycle disruptions and different things, it has, in pretty much in all respects, reconciled itself to the point now where it's, information business. Everybody knows what's what. The OEMs know what the value of their product is. And it's become a basis point business where you're looking at these arbitrages and basis points rather than the big chunks that we used to in the 80s. That's why I remember giving a speech back in the 90s saying my son will not be an aircraft trader because this whole Wild West arbitrage is not available anymore. I mean, it's a whole different thing. It's about capital, access to capital. Hazy understood that early on and, went and got the capital, and he was able to scale. Scale is another big thing, obviously. Mm-hmm. So the trick is not getting caught in the middle of all that, and now it's much, much more difficult. I mean, I can still do it. It's not as easy as it was, back when I was young, but it still can be done. I've got, I'm in this last cycle now. I mean, this cycle for me will be my last cycle. And it's pretty clear to me how this is all kind of flowed over the years, Yeah. So anyway, so then I left PK in 89, started my first company called NSJ Corporation, built up a portfolio, I think, of 17 aircraft, traded a whole bunch of airplanes. I was leasing airplanes to Midway Airlines and DHL and Value Jet and Airborne Express and all the old, a lot of the old carriers. I did a big deal with Lufthansa, started that in 1995. We did that. And then over the years, and my brother has picked up on a lot of that Lufthansa stuff. I think between me and my brother, Sam, we did 50, 60 airplanes with Lufthansa between 95 and 2010.
Yeah.
Yeah. And it's all relationships, and with Lufthansa, we tried to make it as flexible as we could for them, and they enjoyed doing business. It was a great relationship. We all did well. Did a big deal with Ryanair. We bought all their 200s in 2003 or 4, whatever it was. Anyway, sold NSJ to Unicapital Corporation, which was leasing company consolidator, which was good. It was good for us, but it wasn't good for the company. I mean, it was a flawed concept. That company went out of business in 2000, and then my brother and I and Wayne Lipman, who was originally with Koff Lipman, we started a company called Automatic, which still exists. My brother runs that company to this day. And I was with that company until 2010. And then in 2010, my brother and I had different views on where we wanted to go on the industry. He wanted to continue with the older aircraft, and I wanted to get into 757s and other things. And we split in 2010 amicably, and I joined Michael Goldberg at Aerolease, and now I run Aerolease. And I've been there for 14 years coming up. Yeah.
This trend is the Wild West of aircraft leasing and financing. Aircraft traders really able to find value on experience and intelligence, and then appraisers show up, and they screw up the whole thing.
No, I mean, appraisers have been there all along. I mean, I remember appraisers
didn't know what they were doing, I guess.
They've been there all along. I mean, I remember back in the early 80s, I mean, talking about appraisers. I mean, banks needed them, obviously, to justify their loans and stuff like that. So they've been around.
I'm most interested in what you said about the OEM pricing, which is really quite fascinating, right? When they understood the value, or better understood the value of the aircraft, the longevity, kind of these cash flow streams, and then, of course, priced more accordingly. And I don't think you can blame them for doing that. But then the cost structures just kind of caught right up to that as well, right? Especially with new aircraft programs.
I mean, it's a science now. I mean, they can analyze it to the penny almost. I mean, they know what they're paying for all this stuff, and who knows with AI. I mean, they probably can calculate it all the way down to the last rivet. But back then, they couldn't. I mean, I think back then the way it went, you got to remember that the business was regulated, so there was a fare book. I mean, if you were going to fly a flight from Washington to Chicago, I mean, the CAAB would tell you what you could charge. So the cash flows were calculable. So when the jet started coming, I mean, obviously Boeing and when Airbus wasn't around, but Boeing and Douglas and everybody knew what it cost them. Hopefully they knew what it cost them to make an airplane. But, they all sat down with the banks and the airlines and the OEMs, and they sat down and said, okay, well, what's going to happen here? And the airlines, well, how long do you think the airplane's going to last? And it's like, we're not sure. Maybe 10 years? Okay, well, let's PV that CAB rate back 10 years, and here's a number. Does that work for you? Banks, does that work for you? Airline, does that work for you? Yeah, it works for us. And then they did the deal. Then the loan got paid off, right? So now the airline owns the airplane free and clear, and then they sell it for, like I said, for what they paid for it. And the OEMs are like, wait a minute here, guys. Something's not right.
So, something's not right, yeah. Which, I mean, and that to me is...
Yeah.
It's fascinating as well in terms of so as a broker, right, in the 70s, 80s, even probably the 90s, right? How did you ultimately, if you're tasked with, you see an opportunity, tasked with selling an airplane, right? How would you know, all right, well, you should sell it for this, right? I mean, was it just because there was no databases, right? It was all based it's maybe you talk to this guy that sold one at some point and you get a sense for what they sold it for. How did you figure that out? Or is it just basically look, we got these airplanes, these guys want $5 million for the airplane. What are you guys willing to pay for it? Right. And It's kind of well, I don't know, I think we might make it work at 6. And you're all right, that works. Make $1 million on, I mean, how, what was the mindset behind that?
Well, but you could be on the other side of that trade. I have been there, where you commit to buy the aircraft for 6 and you could sell it for 5. I mean, that's also the case. I mean, the trick is not to do too many of those.
Right. Yeah. But that to me is fascinating, right? In terms of how that's where the opportunities were created, obviously from, somebody just doesn't really know what they have. And they're like, oh, look, we're making money. So, we've already paid these off, right? So great, get rid of them.
The other factor in that impacted a lot of these decisions and valuations is market cycles. Okay? Yeah. I mean, and the DC-10 is the classic example that a lot of the old timers bring up. The DC-10 was one of those airplanes, like when I said that O&A liquidated in 1978, the DC-10 was the king of the sky. I think, 40 million seems to be the number. But, the new aircraft price was somewhere around 40 million, and then you'd fly it for a while, and then, the airplanes were sold for 45 million. This was one of those events where the manufacturers were like, wait a minute, the airplane's worth more than we sold it to you for, and you used it for 5 years. And then American crashed in Chicago. You remember the engine fell off. The airplane crashed, and then the airplane got grounded, and the values went in the tank. And this was one of those things where, it was, and then interest rates came, and the DC-10 went down to 10 million, from 40 to 10 in 2 years. Okay, and then people started buying those aircraft in 83, 84, 85, and then by the end of the 80s, the airplane was back up to $35 million. Yep. So there's your arbitrage. The guys who came in and, there were deals done at Swiss Air and KLM and all these different airlines by guys like Gunnar Bjorg. There was a guy named Jim Dollins who was the king of KLM for a while, doing deals and, buying aircraft at the low point in the market because everybody was nervous about economic situations. And then the market obviously would come back like it always does, and ka-ching. That was aircraft trading in a nutshell. And then the DC-10 had another couple of these pops, even into the 2000s, until now it's gone. But amazing. It was a lot of fun watching that.
But that's that edge that you're talking about that existed in the 80s. So I agree wholly that, now it's a capital game. It's a spread game. There's so much data, there's so much information, but the thing that has not really changed are those cycles. People still freak out during down cycles. COVID, a great example, right? A very big example, frankly. Right. But a near term, a recent example. that edge to me seems like it still exists, right? So this is where experience really plays, because you know how many times the name DC-10 came up during our COVID discussions? Never. But think about that context that you had going through that cycle, and people who had been around or studied that time, the DC-10, the L-1011, the crash and all these type of things.
Yeah, I mean, no.
The
A330 is this market's DC-10. That's my line these days.
Love it. Love it. Agree.
Yeah, let's talk about the cycles for a minute, because that's important. That's an important part of this. I mean, the first real, I call them triggers. The first trigger that we had was 73. And jet aircraft really had only been introduced, let's call it the early to mid-60s. And 73 was the oil crisis, right? And then 9 years later, 82 was interest rates and inflation. And then we had a recession. 90, which was 8 years later, we had Iraq. 2001, which is 11 years later, we had 9/11. 2008, which was 7 years later, we had the financial crisis. And 12 years later, in 2020, we had COVID. So first thing you have to look at is, what are the connections between all those triggers? Nothing. I mean, okay, you can make an argument, if you're George W. Bush, that Iraq and 9/11 had a connection, but I'm not sure that's the case. But the point being, you had oil price, inflation, war, terrorism, financial crisis, and pandemic. Nothing connected. It wasn't like, it's always the same thing. But one of the things that we know is that there was a trigger, and the average time between the trigger is 10 years. Like clockwork. And it's happened ever since the beginning of jet aircraft started. And so now here we are, we're in a recovering market again. I mean, we had to get through COVID and we had to do all this, and we're in a recovering market. My timing is 28, 29, 30. That to start looking for the signs. And in my mind, the signs is when lots of capital comes jumping in the market and everybody gets frothy and you start seeing stupid deals happening. That's a sign, get out, And the way I've worked it is that, I sold my company in 97. The trigger was 2001. Automatic, the company I had with my brother and Wayne Lippman, we liquidated 36 airplanes in 2007. The last one we sold was 2008, January, and September 2008 was the trigger. And same thing with Aerolease. So in Aerolease, I think we had 16, 17 airplanes, and we liquidated those in 2018. And everybody was criticizing me, saying, you're missing the mark, And then COVID came, and and now here we are. And now we're buying aircraft now. We bought one 330. We're looking at some more 330s. We bought a couple A320s. And we're starting to spool up again, and we'll do the same thing in 28, 29, watch it until it gets frothy, and then liquidate. So, I am a contrarian off-cycle investor, The only way, in my experience, in order to continue in the business through these cycles is scale, okay? And that leads to the whole M&A conversation in the leasing business. I mean, the guys who are really obviously AerCap is the golden one on that. But some of these other companies, either they got to grow or they got to get bought, and we're going to see that more and more, I think. Over the years, that's the only way you can manage through these. Otherwise, you've got all kinds of issues you got to deal with, cross defaults and what's the values and all that stuff. So we like to just get in, get out, and then start again.
Yeah. So you talk about the A330. I guess from your side, right? How do you focus on an aircraft type that you think is worth investing in, right? What's your methodology in terms of like how do you come up with an airplane that all of a sudden you're like, you know what, I think there's something there and we should put more focus to understand that market inside and out and go all in?
Well, there's one thing that is cycle specific, and then there's one thing that's this cycle specific, and I'll address both. So the cycle specific one is to identify aircraft that have a good, flexible utility value. The DC-10 was a perfect example of that. 757 was another example of that. I mean, the 757 was the greatest airplane Boeing ever built. And, it's still flying today. And Delta and United, we see it here at Miami International all the time. And they're going to be flying for a long time, even more. I mean, they're flying as freighters, and that's a whole other conversation. But, is identify the aircraft that is a good utility airplane. And we identified the A330 as that aircraft. We thought the A330 was underappreciated, just like the DC-1030 was from time to time in the market cycles, but that it did a good job. It was efficient. It was seat mile cost effective. There was a huge operator base. That's another aspect of this. And there was fish to fry, as I like to say. So we identified the A330 as a target way back before COVID. We didn't know kind of how it was going to go, because you got to remember, back in the late teens, I mean, the A330 was kind of nobody knew whether they wanted to. A lot of investors were like, "We're getting out of it," and so those are the
it was still struggling already, right?
Yeah. The cycle specific aspect here, and I think we've talked about this before, is the shutdown of production due to COVID, specifically with the wide bodies. The concept of production shutdown is fascinating to me as a trigger event, because we've never had this before. Back in 1990, when the Iraq War happened, and in 2001, and in 2008, the factories never shut down. They never closed. They may have built aircraft that went to the desert for a while, but when the market came back, all those aircraft existed. I mean, I remember one year we bought a 767 that was built in 1994, but it didn't start flying until 1996. Sat for 2 years. Air France had built it, parked it, and then when the market came back, they went back and they got it, and they started flying. So when you looked at the specs, you were like, hey, wait a minute, this aircraft, it's not right. It was no, it sat for 2 years because of the downturn. So, and the same thing happened in 9/11. The factories never shut down. But then MAX happened, and COVID happened, and all of a sudden you've got this giant hole of unmanufactured aircraft. And depending on who you talk to, you guys probably have an opinion on this. It's either narrow body. I've heard anything anywhere from 2,500 to 4,000 airplanes. Wide body, the general number everybody throws around is 1,000 airplanes. And due to the fact that the OEMs are still not able to get back to their pre-COVID manufacturing levels, that number continues to rise every month we go by small amounts. And not only that, but all the aircraft that they're building now were designed to be delivered now for whatever it is. So they're never going to get to a point where they get to 2019 and then they increase it by 50% in order to make up the shortfall. So now in the wide body space, you got 1,000 airplanes that were never built. They don't exist. They never will exist. So now what is going to be the impact going forward? And two things are, number one is new aircraft deliveries are going to become way more expensive, and the values of used, reasonably young airplanes, 10, 12, 15-year-old airplanes, are going to stay high or go up because the one thing you got to remember is that when COVID happened and the factories shut down, that created this environment that we're talking about. But as soon as COVID ended, all the passengers, they showed up immediately, and they want to fly, And so that is one of the dynamics of the A330 that we love. And same thing on the narrow bodies,
Yeah, one of the things that the 330 has that is not necessarily present on the narrow body side, and Garrick knows I've been eyebrow deep in a aircraft forecast here. And what we're seeing is that, we've been talking about the narrow body shortage for what, 3 years now, Garrick? I guess it was 21.
Yeah, summer 21. Yeah.
And for all the same reasons that you outlined, Jep, absolutely 100% agree. However, the focus has been on restarting narrow body production today, right? Like the priority has kind of gone to getting those narrow body productions up. And they certainly have. But the size and utility of the narrow-body aircraft have greatly increased over the aircraft they're replacing. So we're bringing on 321s over 200 seats sometimes, and they're replacing 319s and 73Gs. So there's a huge increase in production, in just capacity production, like seat and ASK production on the narrow-body side. Not present on the wide-body side. In fact, I think you could argue that the opposite is probably happening, especially right now on the wide-body side, where you have 380s that will never come back, right? The fleet has, but the numbers haven't. So that's reducing. 744, the 748's out of production. The largest aircraft being produced right now is the 350-1000. The 777X is, I don't know, pick your year before that hits production levels. And so you're seeing a need for airframes in the wide-body space as opposed to more seats that are being produced in the narrow-body space. So that has this incremental benefit. And then, of course, for reasons you all know, it was the 330s that are there and available 5 to 10 year vintage, as Airbus, tried to overflow the gap that the 787 left from those challenges. It's a great looking asset, and the utility. I'm glad you used that word because that's what it all kind of comes down to for me. If I'm an airline,
you got to remember,
wow,
yeah, absolutely. I mean, you got to remember that the big chunk of all the COs were built after 2015. I mean, if you look at the production, it bubbles up after 2015. These airplanes are not old. I mean, a lot of them are under 10 years old. Most of them are under 10 years old. And so, airlines are going to keep them longer, and they're not going to upgrade. And they have to because the NEOs are late. I mean, we see it all the time, when we're out and about. The other thing that happened in COVID that I thought was interesting was that, and I think part of this is there was still a lot of capital that was in the space because money is the fuel for all this, let's face it. And that capital felt more comfortable in narrow bodies and wide bodies. So the values, we didn't see a big drop in value. We didn't see any drop, arguably, maybe a little tiny one, but you didn't see a drop in the value of narrow bodies where you did in wide bodies. That in 2020, 21, all of a sudden the values of wide bodies were going way down because people were risk averse and they wanted to get rid of them, and there was a lot of defaults and groundings, and airlines were going out of business from COVID and stuff like that. So you had this disruption, and that's what we live on. We live on this kinds of disruption, and those are the markets you got to go to. If you go to look, I'm not winning any RFPs. I don't even participate in RFPs. Okay, if I can't find a deal that I can do with friends and family or with with an angle, because I see it all the time. My friends, they go out, they raise $1 billion, and they have a big party, and they tell everybody, I got $1 billion, I'm going to go start an aircraft leasing company. And then they beat their head against the wall trying to participate in RFP, which in my opinion is a winner to the bottom, first loser, because now, okay, you win a deal, and what are you making? You're making basis points, and that's no way to. And the only way to do that is in scale. I mean, if you go and you're M&A and you're going to buy this guy and that guy, that's a thing. I get it, and I understand that, and guys have made a lot of money doing that. But if you're going to do it the way the old style aircraft trading, you have to do it tactically, and find these opportunities that are there, and they are there, but they're harder to find than they used to be.
Well, they exist. Like you said, they're harder to find, but they're also going to be just smaller in numbers. I mean, by definition. So it does limit kind of, AirCap's not going to spend the time going after these onesies and twosies, but the yield will be there.
No question.
Yeah. Yeah, absolutely. And we're, look, it's one of the things that, I started talking about last year on the wide body side, and you've already seen over the course of, actually, no, not last year. Sorry, late 2022. But you've already seen demand pick up, hugely on the A330s, and that's kind of, you're seeing lease rates go up, you're seeing values go up. Now, obviously it depends on how long this cycle continues and this level of demand continues, but, based on kind of what we're seeing on the production, side of things and the demand that's still there, we still got definitely a few good years for that trend to continue, right? I mean, I'm sure that there is a point where all of a sudden the aircraft pricing doesn't make sense for a used airplane, right? There's probably a math, right, that doesn't work for operators where they're going to go, look, if I'm going to spend $600,000 on a used airplane, I might as well just go and try to get a new airplane, right? Or whatever that math is.
Yeah. That market writes.
Yeah, absolutely.
That's the whole thing. But if the seats aren't available, I mean, you will see an increase in. We're seeing it, even in narrow bodies. The rates will increase until they don't. And that is also a factor of yield and traffic. But right now, man, all I see is lots of traffic, and the yields. I mean, I don't know. You guys going to Dublin? Fares are nuts.
No, don't even get me started. It hurts. I mean, who goes to Dublin in January but a bunch of aviation finance people? In fact, the cab driver will tell you that. Every time I've been in Dublin for the conferences, the cab driver says, "What are you doing here?" I say, "Aviation." He goes, "Thank you, because you're our entire economy for this month."
Exactly.
Yeah, but that's part of the issue, right? There's too many of us that go to Dublin.
Yeah, but and it's all up front too, so it makes those prices even higher. But that's very true. If there are people lined up at the door, I think we lose track of that key metric from the kind of financing and leasing space. Demand, we think of supply and demand being on the aircraft side, and while it's purely a function of how many people are lined up at the door to get on an aircraft. And right now, there are more people lined up than there are seats, which means fares go through the roof. Right? We're seeing the same thing with yields. So because seats now become more valuable, the aircraft themselves become more valuable, especially in a short term. But what I'm more concerned about is, okay, so what does that mean for the future? Because the airlines are very quick to readjust their cost structures to go after this yield premium that won't always be there. And then we start the next cycle, right? And that's probably, like you said, it comes once every 10-ish years, so 2030 is kind of the next round.
I think the interesting thing on this next cycle, it depends on where you are on this issue of global warming and stuff, is what is going to be the next propulsion change. In other words, is global warming going to be an impetus enough? And I don't know the answer to this. I'm not saying I have an opinion. But is global warming going to be enough of an impetus where this whole conversation of SAF and electric and hydrogen and whatever other gimmick you come up with, is it going to be a thing that is going to be necessary to have on any new white paper airplane going forward or re-engined airplane? You have this Jet Zero. You have Jet Zero, which I think is a fascinating project with the blended wing, that's out there. Mm-hmm. And we've been kind of active in monitoring all this and being kind of informed. You may have seen that Aerolease made an order for 50 Aviation Alice's, full electric airplane. Yeah. I mean, one of the reasons we do that is to kind of be participating in this conversation going forward. It is going to be a thing. I think it's going to be a thing, obviously, and we're going to see how it goes. But, as far as development of a new aircraft is really going to be limited by what is going to be the new engine technology which is interesting because then the question is where the OEMs sit as far as that gap between now and then. When you talk to the engine OEMs, they are not sure how early this new technology is going to manifest itself. Is it 2035? I mean, I've heard dates as late as 2045, So now the question is, here we are in 2024. We got to get from 24 to 2035 or 40 before we have clarity on what the new engine technology is going to be. Can you make it with the existing product? Can you sell that many? Are people going to, and then the other question is, we've had this happen before in the industry when the new technology becomes evident. Who's going to be the last guy to buy the last Max?
Right.
Not me.
No, it'll be Ryanair.
It probably is going to be Ryanair. Right, you're right. But my point
right?
is
and
that
it'll be for a song.
But this, you got to remember, we've had these situations in the industry. In the 80s, it was noise. It was all about stage this, stage 3, stage 4. And you can't build another stage 2 airplane. Is the JT8D-200 really stage 3 or 4? Hush kit conversations, and there was a lot of money made in that kind of activity with hush kits and re-engineering and all that stuff, some of which we were involved in. And now it's different. Now it's sustainability. And there's a whole SAF conversation, and that is what's driving that conversation. But this transition from this technology, the technology we have today, until whatever we're going to get in 30, 40, is going to be fascinating to watch.
We're already in that. I don't know that I want to call it transition. I mean, we're at the very early stages of it because the effects are already being felt. And what I mean by that is the cancellation of the NMA program. Like, how can either of the large OEMs say that they are going to develop a clean sheet program in today's technology for the next 30 years? You can't. You don't know what's coming in the next 30 years.
Yeah, but I think
something
Boeing
big is going to change.
Yeah, I think Boeing's already said that. I think they already said, we're not going to be able to really pick up our pencils until we know what the new propulsion technology is going to be. I don't know if that's going to happen or not, but it's fun to watch. I'll tell you, this is all new stuff.
Yeah. So I was going to ask the question. You mentioned the Wild Wild West of kind of the 1980s because we didn't really know looking backwards. And I was going to ask a question like, what 20 years from now, 30 years from now, what will we look back on as today and saying this was the Wild Wild West of what? But it kind of sounds like it was that transition to whatever the new technology is going to be. I mean, it does feel... from that context, it feels very unknown. At this point in time.
Yeah, but everybody's involved. Rolls is involved, Airbus is involved, and NASA's involved. Everybody is trying to figure out what this is, and something's gonna percolate and connect, and everybody go, okay, yeah, we all agree that's it, and let's go and design a product around it. I don't know. I'm not sure electric is it. We're invested in electric in Alice. It's more of it's a project. It's a project to see, and it's a small aircraft. There's only 9 passengers. So, one of the big buyers of the orders of the Alice is Cape Air. Okay, perfect aircraft for Cape Air. Caribbean, local Caribbean, New England, kind of back and forth seasonality. Perfect aircraft for them. And if that works, and they put it into service and it works. And the question is, can it be scaled up to, bigger narrow body aircraft? I don't know the answer to that. Obviously, battery technology is the one thing that we're really focusing on. And the question is solid state battery technology going to solve that problem as far as size and weight and all those things? Because everything is a compromise when it comes to that. You can fly electric, you got to carry these refrigerators under the airplane of batteries, and that's not going to work. So,
right. Yeah. It's definitely interesting to think about the environment that we're in today, right? And if we if we didn't have all of the technical issues that we've seen on the engine side and on the production side and everything else, like, we'd probably be having a totally different conversation today about, oh, you know what, now, they've had this many years of production. They're at, almost kind of where they want to be in terms of production rates. So the discussion would be, we're talking about the next thing. But I don't think anybody's gung-ho about like, oh, let's have that conversation about, let's put the next thing out there, because they're all kind of struggling to go, look, we've spent billions of dollars on all these products, and we got to make some of that money back, right? We got to make money. We can't just put, nobody's going to let us spend another $5, $10, $15 billion on a new product when we haven't justified the fact that we can do the first thing.
But these, look,
and it's
the LEAP engine is the LEAP and the GTF, I think, technologically, are good engines. I mean, I'm confident that Pratt & Whitney is going to solve this, just like they solved the JT9, just like they solved the Pratt 2000. I mean, back in the day, the Pratt 2000 was a dog of an engine in the beginning, and now it's the one everybody wants on the 757, And same thing with the Pratt 4000. It started off slow, and they fixed it, and it ended up being good. I think the same thing's going to happen on the GTF. But you're absolutely right. I mean, they're in the same situation as the OEMs. They're wed to this product right now, and what will happen in the future is something else.
Yeah, no, absolutely.
Some of these concepts that we're talking about, be it electric, and electric is pretty well limited to the small aircraft right now. SAF is probably the easiest to get my mind around. But then we have hydrogen and, even blended wing body, which is, just, it's a pretty extreme design change, but technologically everything else is fairly consistent. Whatever direction the market is going to go, we don't know what we don't know is going to be the problem yet. I mean, it's so early. With increasing the size of an electric aircraft, okay, how do we deal with that much energy? If we're increasing battery density, how do we dissipate that energy in an emergency? How does temperature affect it? How does all these things we don't even know yet? And don't even get me started about the eVTOL space, because there's just a whole other element of we don't know. Other than, I think what we do know pretty confidently about that space is it's not really the same thing about what we're talking about in moving large passenger aircraft.
I think that's a whole new industry.
They are two different markets. Yeah, absolutely.
Yeah. I mean, absolutely. Engines is, power is another aspect of aircraft trading that is very interesting to look at. I mean, there are guys right now, obviously Charlie Willis started the whole thing institutionally as far as focusing on the power, because that's essentially the lowest common denominator for the aircraft. You got to have power. And FTAI Aviation is really done well in that space. They're focusing now much more on the power side of the equation than the aircraft side of the equation. But that is all part of this conversation as well, transitioning into the GTF and the LEAP and then new technology. And as far as what is the relationship between power and the airframe? Because back in the day when we were buying and selling airplanes, it was just you buy an airplane, you sell the airplane, What's the status of the motors? What's the status of the gear? And you make a determination. But now if you're going to bifurcate these as asset classes, where it's airframes and then power, which is essentially what's happening with some of these companies like ELFC and FTAI Aviation and stuff like that, which is, I think, a very interesting proposition.
And it's for even for those guys, right? I think to me the challenges that they have are pretty interesting to watch as well, right? If you look at somebody like an FTAI who's been very focused on, the CFM, the PW4000s, the CF6s, how do you transition into some of the younger generation like the GTF or the LEAP when there's so many issues that are still there, right? And how do you make that transition knowing that you're taking on problems, right? So when I guess it's more a matter of when.
Yeah,
it's a matter of when.
Yeah, and first of all, it's a matter of when, but I think also the OEMs are, keeping that all under their control as much as they can right now, and that always takes time for it to start filtering out to the market. So.
Yeah, absolutely.
And that engine airframe OEM dynamic feels prime for change as well. You have Pratt, Rolls, and GE all fighting to be on airplanes, all fighting to put engines on airplanes at a loss for downstream revenues. That the airframe OEMs are more than happy to replace before they ever get there, right? Which has kind of been the latest round of re-engineering. We've talked about it several times on this podcast with a couple people, but the whole idea that this latest round of re-engineering on the narrow body side, the benefits that are there, and they're real fuel burn and cost benefits, came almost entirely from the engines.
Right.
And you have the engine manufacturers saying, wait a minute, and I'm the one that's
just us
money?
This brings Courtney, this brings up the whole concept of Jet Zero. What I love about the Jet Zero concept is a big chunk of they're saying 50% improvement. I mean, they're talking about a platform where they're going to put GTFs, and they're saying that on the A320 size Jet Zero airplane, it's a 50% improvement on existing. That's a lot of that is aerodynamic. I mean, why do we have airplanes that are tubes and fixed wings, wings like that? And it's a good question. Well, part of it is legacy, it's status quo. That's everything is that way, and it's hard to deviate from that. I'm not sure. I know there's a lot of airlines that are talking to them and that are interested in that technology, because you can't ignore blended wing as a concept of aerodynamic improvement. It was just the fact that it's true. But if they can pull it off, and they got this military contract now, if they get flying with this military tanker thing, I'm telling you, people are going to wake up and they're going to pay attention, because it's big, and it goes right to what you're saying about the airframe being part of the solution on on improvement. So.
Yeah. We tend in our side of the industry, and this being kind of the aviation finance, I don't think we fully appreciate the power of manufacturing simplicity in aircraft design and just kind of the aircraft improvement. I mean, look, there's a reason why there are narrow bodies leaving the factory in Renton today with a 707 fuselage, effectively. Right? I mean, commonality matters. But wing design, right? I remember at Bombardier when we were talking about the composite benefits of the wing, my first thoughts were, the weight we can save. Actually, there wasn't really much weight at all. The benefit was you can shape the wing exactly like you want it. And my thought was, well, can't we do that? No, you can't with aluminum. Right, you're more limited to what you can do with the aluminum. So breaking out of those manufacturing constraints, I guess it's not just desired; it's required for what's coming next with Jet Zero. And I agree with you entirely. Right, it's an aerodynamic upgrade. They have, I guess we can't say they found a way out of the manufacturing challenges of that, but they're sure going to try, and that's something that hasn't been done yet. We've been hearing about blended wing.
Yeah, we have blended wings flying today. I mean, they're not in commercial service, but one flew over whatever they played down there in the Rose Bowl. That's a blended wing. It's flying around. They got data. I mean, the military definitely has data on these flying wings. So. It's a thing. I hope they make it. I would love to see one of these landing in Miami, one day. It'd be kind of cool.
But that is a great way for us to progress, us as a species, I guess, to progress into the future. Why are we, just to the base level of why are we burning more resources and emitting more carbon simply to the order of 50% when we do have the technology to do it? We're just having manufacturing challenges in producing it in a big scale. Sounds like now's the time when things like Jet Zero.
you're saying it's a thing. There are a lot of people that say it's not a thing, so it depends on, where it's going to land. I agree with you. I mean, I think it's something that needs to be focused on. But, when you're talking about the engine, I mean, the worst thing that happened to aircraft like the 737 was that high bypass happened. And then the bypass got higher and higher and higher. And, you look at a GTF and tiny little engine with this huge cowl. It's tough. Tough.
It's a ducted turboprop.
Those things under there.
Ducted turboprop.
Yeah.
Yeah, I mean, soon, right, it's just going to be like having three fuselages, right? Basically, that's what it looks like.
Yeah. Exactly.
To make it work, yeah.
Oh, it's funny. I mean, we see here in Miami, when you see a Neo next to a CO, I mean, it's huge, big difference, in the diameter.
It really is, yeah. That can't continue, right? Where all of a sudden you get to the point where you've got like two fuselages and then something that looks like, you got two huge engines that are bigger than the fuselage and like a really long tube. Something's got to give, right? I guess the aerodynamics don't work or whatever.
But only because there's no cowling around a turboprop. The prop. Right? I mean, yes, you could continue to expand that. But when you do, you reduce the speed of the aircraft, which, by the way, is a trend that has been happening the last couple decades. Maybe there's more there. I tend to agree with Jep entirely. We have a real problem on the long haul and the wide body side. I'm not a big believer in the whole cryo hydrogen thing. So there is no replacement if my theory comes true. But because again, if we're looking for net zero, are we missing net 99 through 1? Because there's real value there. And that's where the blended wing and that's where SAF and all these things just really add up and we continue to travel.
When you think about, I guess the last, I don't know, 40 years? No, 40 years. Have you been into 40 years? Is that 40? Wow,
46.
Yeah.
78.
46. Wow.
Maryland job. Yeah.
I guess when you think about the last 46 years, right? I guess what have been for you the biggest disruptors to what you do over the course of those last 46 years?
Information efficiency is the worst thing to happen to me. Once everybody knows everything about everything. Now with in the connected society like we have now, it's available. I mean, you can pretty much find out anything you need to know about aircraft pricing and values, and within a range. I mean, everybody's secret about it, but everybody kind of knows. I mean, this is the whole thing about RFPs is you're dealing in minor basis point things here. Everybody's trying to get the best deal, and those deals are measured in tiny little increments. There's no big value there. I remember Robert Martin at a conference from Boca saying years ago, this is a 9% business. 9% business. That's it. Okay, you're going to have some deals you're going to make 17%, but you have other deals you're going to make 1% or less than 1%. So it's a 9% business. He's not wrong. I mean, at the end of the day, I find it interesting. We talked about it before because the fuel of our industry is capital, and it always comes from some source. I mean, when I started buying aircraft on my own in 1989, it was banks. You go out and get bank debt, and there was a point where you could go out and finance more than 100% of the purchase price of the aircraft based on appraised value. You're welcome. And then some of the banks got in trouble. That went away. You got later in the decade and into 2000s, and it got sort of replaced with ABS and capital markets. ILFC and Steve Haase and John Pluger were really good at getting their capital structure reconciled with the industry. The problem, if you go back in the 80s when it was GPA and ILFC, the big difference was that GPA was using a lot of bank debt that was secured by the mortgage of the aircraft, all cross-defaulted and cross-collateralized, and then you had ILFC who had corporate paper where they could basically do anything they wanted as long as they made their payments. So they could manipulate the cash flows, they could use the reserves, they could, and if they had a defaulted rent, they could use money from another deal to pay the payments. When GP got in trouble in the early 90s, it was because the industry went down and they had tons of defaults, and it brought the house down, where GCAS showed up or GE showed up and started GCAS. And then it was all about GE's capital, which was just as structured as ILFC's. And so they were able to do this. The problem is when you match scale with incremental aircraft financing, that doesn't work. You have to have this kind of flexible financing. ABS did the trick on that in the 2000s and 2010s. That's gone away now. And now in this market, you got a lot of private equity who's shown up and they want to get in. The thing about private equity that I've observed is that they have a very short attention span. You know, you have guys who they want to get in the aircraft business, and then they show up, and if you're not showing up with returns like next quarter or next week, they get bored, and then they go on to golf courses or sports teams or scoreboards or whatever the next hot thing is that they want to get into. They're not aviation guys. And, these is like, so many of my friends have gone out and raised money and to go out and build a portfolio. And that's a process. That's, a thing you're going to build a portfolio. And these guys don't have that attention span. So I don't know how long they're going to stick around in the business. I mean, and that's going to foster consolidation. We're already seeing it where some of these companies are talking about buying other companies because the underlying money wants out. I mean, Gueric, we know people who are in that situation right now, who are liquidating or managing that kind of dynamic. We don't like that. Our logic is if I have a deal and I can find a deal and craft a deal that is a good deal, I'll find the money for that deal, either myself or with other investors that I've done business with. If you have money that's chasing deals, that's when you go into RFP, Alice in Wonderland world, and it's not sustainable. You're not going to make the returns that you need to make. So the only other way to do that is scale, and that's all M&A, and you go out and buy other companies and keep the ball rolling and keep moving forward. And that's a thing, not my thing. So
Yeah. No, I mean, so I guess to touch on the first thing you said in terms of, information, right? That's kind of what's changed things. Do you feel that because everybody's been, so focused on getting more data, getting more information, right? Trying to get as much as they can. Are we in a situation now where we're kind of at information overload, where there's just so much information that's available out there that it's hard to really kind of differentiate what's valuable and what's not?
Well, no. I mean, at the end of the day, information is good because you can mark to market easily. You can sit down and you can look at, you can make decisions on deals. The only problem with that is that it makes the arbitrage opportunity for a trader less frequent. And that I mean, all the deals that we're doing are either distressed deals none of the deals we're doing are hardly any of the deals that we're doing are deals where the leases are attached. I mean, everything's baked into the economics. I mean, if you go to an RFP and somebody has an aircraft on lease to American Airlines for 8 years, and it's a A321neo or whatever, I mean, the economics are all baked into the deal. The seller knows exactly what that airplane's worth. Then it's just a matter of a race to the bottom. Who's got the cheapest money? And who's gonna bring their offer up, and the winner gets a deal. The word I hate is BAFO. I hate BAFO. What do you mean BAFO? So we don't participate in RFPs. I mean, we just don't.
But BAFO always comes
before there's chopping your head off.
Then there's the BARFO. The BARFO comes after the BAFO. It's like, okay, you gave us a BAFO, now go one further.
Yeah. You're on the short list. I love that phrase.
So do you think I guess look, a lot's happened just in the past 4 years. Of course, that's the understatement of the century. But from a capital perspective, where do you think the industry, the aviation finance industry, rests today in terms of the amount of capital looking for deals? Do you think that it's still elevated? Do you expect it to get higher? How is that changing how you look at the industry?
It's always a flow. I mean, there. One of the things I've learned in these cycles, there's always going to be capital coming from somewhere. Like I said, it's always some different kind of form, whether it be bank debt or commercial paper or IPOs. I mean, that's a thing, obviously. Or and then it moved into ABS, and then private equity now has really established itself in the industry. It'll be something. I don't know what it'll be. I mean, the banks may come back. That always flows up and down. I remember when I was at the bank, some years you were real aggressive because you wanted to build the book, and then other years it's like, oh, we got to get out. I mean, It all depends on what. But the great thing about aircraft is that you can move them around. It's not like real estate. I mean, if you buy a building in Wichita and Wichita goes in the tank, you're in Wichita. But if you have an aircraft in Wichita and all of a sudden the market's good in Bangkok, guess what? You're flying to Bangkok. And people understand that flexibility as far as a capital asset, and that's attractive as far as capital management. So I think you're always going to end up with capital available in the market. What it looks like, what's the source, what's the structure, could be different. Back in 1980, we didn't know what ABSs were. I mean, there were loan participations and consolidations of assets and financings and things like that. But as far as commoditizing the bonds and all those things, I mean, that all came later. So who knows what it's going to be?
Yeah. I mean, who knows what next product somebody's going to come up with that's going to structure things a different way that makes it attractive to a different set of investors, and who knows, right? That's the beauty of our industry, is that somebody always figures out a way, right, to be able to do more business. Because if you're all of a sudden all in on the ABS side and you don't do any more ABSs, well, it's time to figure something else out. You don't just kind of wait and sit around and wait for it to come back. You just kind of at some point go, well, I'm not getting paid my bonuses, so let me think of something else. So, but yeah. So for 2024, right? What if you had to come up with a prediction of something that you could see happening in 2024, right? What would it be?
So in my view, obviously we're in recovery now. It's happening. People are back and behavior is back. Travel. I was traveling for the last 2 weeks and packed. Everybody's running around. So I think there are two things that I see. First of all, air travel as a behavior or as a mechanism of social transportation is so established now. It's like taking the bus. Literally, people will fly from place to place for the most minute reason, to go to a ball game, to see a friend for a weekend. I mean, the whole idea of travel behavior is not like it used to be, where it's a big deal and I'm going to go travel and go to the airport. So I think that is going to continue. That whole behavioral thing is going to continue. I think the thing that keeps me up at night is stupid things like Ukraine, the Middle East, Taiwan. Those are the kinds of things. Geopolitical hotspots. My hope is, with the exception of Russia, because I can't figure these guys out. I mean, it's all KGB. I want to be back in the, USSR kind of thing. I don't get that. I mean, I get that, but as far as geopolitical, my hope is that clearer heads will realize that being in a global coordinated economic thing is better for everybody. I mean, we want to buy stuff that's made in China, and China wants to sell us stuff that's made in China. And hopefully China doesn't want to pop that balloon simply because they want a little island in the South China Sea. And we don't want to get involved in that either, because we just want to keep doing stuff. And at the end of the day, if everybody understands that, hey, look, if we all just get along and we all buy each other's stuff, this is the best way to go about doing this. I mean, there are a lot of dynamics to unpack in that conversation. I mean, what does Russia make other than oil? Nothing. So, but would they be better off if they were in the community of nations in Europe and the U.S. and the West and all that? Probably. I don't know. I mean, but those geopolitical hotspots concern me because, if something stupid happened and there was war in Europe or something like that, it's going to blow everything up and everything's going to reset, and that'll be a trigger. But but now, having said, if it's staying as it is and we don't have any of those issues, I think this is going to continue for a good 5, 6, 7 years. Going back to what we talked about the OEMs shutting down the factories for MAX and COVID, I think that impact is going to be with us for many years, many years. I think, airlines are going to start taking better care of their older airplanes because they know they got to fly them longer, because they can't just willy-nilly ground airplanes because they got all these new ones coming in. Ain't going to happen. Yeah, I mean, all things being equal, this market's going to continue recovering for the next 4 or 5 years. The thing that keeps me awake is geopolitical risk, Ukraine, Taiwan, Middle East. That does concern me, obviously, although we have had Middle East issues since 1949. So, that's something that I'm not saying it's predictable, but at least we know what we're dealing with a little bit more than Ukraine and Taiwan. I would hope that the Chinese are more interested in maintaining their commercial presence in the world rather than having a small island in the South China Sea, but, who knows? And then in Ukraine, the big issue is, are we going to have war in Europe? And, stupid things like Sweden telling their country they got to go on war footing. I mean, it's ridiculous. I mean, if that were to happen, if there was war in Europe, that's obviously going to be a trigger of some sort, and it's going to have an impact.
Yeah, we talked about cycles, right? And I'm so glad you mentioned the 10-year cycle, because I literally got done saying the very same thing to Garrick, although he's the only witness that I actually said those things, and he'll
I didn't hear anything. So.
But I do want to talk about the other cycle, the more geopolitical cycle, which is kind of a 70 to 90 year cycle where we have these big conflicts. And that is arriving kind of within these kind of 10-year cycles. We're kind of getting back to that. And again, I'm not a geopolitician. I don't know. There are a ton of reasons why that may happen again. There are a ton of reasons why it may not. We just know that the cycle that has happened is arriving fairly shortly. And shortly in the 70 to 90 year context. But that presents itself as a risk. It's different than these 10-year cycles, right? These are more economic. We will have a trigger. What will the trigger be? I don't know. It'll be a trigger, and we kind of know the way the economy is going to react. There are a lot of different cycles going on, but what you're really talking about there, and I agree wholeheartedly, is the risk of that black swan seems to be higher historically right now. And I think it's also interesting to point out that nobody's talking about the next pandemic. Like 2 years ago, the first time anybody sneezed, people went crazy. Now we truly are in that post-COVID world. And like you said, if the 10-year cycle proves true for the 10th time, whatever it is, we've got 5 or 6 years on average before we enter that next downturn.
I mean, if on equal footing, I mean, it's going to be something will happen in 29, 30, and it's almost like a foregone conclusion. Everybody, not everybody expects it. I mean, I get a kick out of seeing some of the young people and rising executives and stuff who've never been through one of these, and they're all like, "Yeah, let's go," blah blah blah, and then all of a sudden, pow! It's so funny. You're talking to the younger people about interest rates. They're like, "Oh, interest rates are so high." I was like, "You have no idea." This is nothing. I mean, 5%. Come on, give me a break. But still, I mean, those are things. On this 90-year cycle geopolitical thing. I mean, I'm just, there's two things that I hang my hat on there. Number one, everybody saw how that worked out last time, right?
Yeah.
You have somebody who has geographic aspirations that wants to do it militarily. Doesn't really work out. Didn't work out for Napoleon. Didn't work out for that other guy. And the other thing is you see how Russia, they can't even take 10 miles of eastern Ukraine. I mean, what are they going to? I mean, they're talking about Finland and Sweden and Poland and there's no way. I mean. NATO gets involved in this thing. I mean, okay, is it going to be I'm not so sure how that's going to go for those guys. So I think part of the other problem is you got to get a lot of these old people. I talk to young people who I work with, say, get into politics, get all these guys, all these old people on both sides of the aisle in this country. I mean, how can you have a person who's 75 or 80 years old making decisions about a country for people that are going to be around for the next 100 years? I mean, you got to get younger people into this thing. I mean, this is ridiculous. And that's not a political conversation about either party. It's just general, It's crazy. So anyway, that's my political.
I totally agree. Yeah. And on that note,
says the guy who's turning 65. I'd just like to point out, so you got another 15 before you can run for president.
Exactly. I was president a long time ago, 10 years ago. So
that's
for
right.
me, I'm leave it to the younger guys.
Well, Jep, this has been fantastic. It's always great to chat with you. It's always great to see you as well. And love to hear kind of how you got your start and how the industry's been for you. So thank you very much for taking that time. Certainly look forward to seeing you at future events the next couple weeks, and then a month after that, and who knows after that. But
and then but we will see you leading the band again this year.
Yes,
in Austin,
we are
correct?
playing a show in Austin on Monday night at Antone's, which is a block and a half away from the hotel.
Nice.
And this year is a big year for us because we're supporting the Peter Warlick ALS Aviations for Aviators for ALS. There are a lot of guys in the band and a lot of guys in the industry who are big on this. So we're basically auctioning off songs to companies who are donating money that is going to Aviators for ALS. So
that's great.
It's going to be a great event. Yeah, it's going to be great.
Yeah,
that's fantastic.
For a good cause.
Absolutely.
And a lot of it'll be a lot of fun. So we'd love to see you guys there.
Yeah, absolutely. Well, this has been great. So
cool.
Thanks again, Jep, and we'll certainly see you soon.
All right, thank you.
We got to do this for a whole second year.
Yep, that's right. Year 2.
This is a great joke. When is a plug not a plug? When it's a jar. When it's in a tree.
When it's in a tree.